All righty. Hello, everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong. I'm a senior manager and a coach with Charles Schwab. I have Mr. James Boyd with me in the chat today. He is a friend and fellow coach. And if you've got any questions, please don't hesitate to ask. We have got a jam-packed class today. So have you ever run out of money? Like you want to do some things and the cash is a little tight? Well, we're experiencing that in our account. So we're going to have some decisions we have to make. We have 2 trades that I'm going to quickly review. And then we're going to do a postmortem on those. We've got 3 trades that we want to take some action on, and then we have a bunch of new trades that we want to place. So I hope everybody is buckled up. I want this to be a participatory class, so like get your fingers flexed, my friends, because I'm going to be asking your opinions on a few things. Daniel's asking if this is being archived. It is being archived and will be available afterwards, and James will post a link to that playlist for you in the chat. I'll post a link to this if you're watching this in the archives, as well at the end of the webcast. It'll also be in the show notes down below. So as we get going, I want to invite you to follow us on X. James and I are prodigious posters, so we're posting content on a daily basis that we think you'll find helpful and informative. My handle at Barb Armstrong CS. James at James Boyd CS. So be there, be square. Know that we trade a lot of options in this class. We also trade, do a lot of stock positions as well, which is why we're a wee bit strapped for cash at the moment. But know that options carry a high level of risk and aren't suitable for all investors. Also know that we use the Paper Money software a platform on the Thinkorswim desktop platform, which is a brilliant place to learn and practice your trading. Make sure you understand your plan before you go to a live account, but know that there are some nuances and differences. And one is that short options will never be assigned early in Paper Money, and that can happen in a live account. So just so that we're aware of that. Okay, so what do we do in this class? Well, I often have an announcement, and typically, I talk about the upcoming in-person events, and certainly those are still happening. I'm not going to spend much time on that today, but if you've never been to a live event, they are fantastic. The next one is at the end of the month. At the end of the month. Denver has already happened. We've got one coming up in Anaheim at the end of the month. I will be there. And then there's one in Miami mid-June, followed by one at the end of June in New York. So, and I will show you a little later where you can tap into those. But basically, you're just going to schwab.com events. Okay, and then we are going to do a very quick market overview. If you didn't join Connie and Kevin Horner for this morning's session, Trader Talks, you'll want to go and catch that at the beginning. So we're going to do super quick look at the markets, and then we're going to spend the majority of our time on placing new trades and on trade management. Okay, so that's what is on the menu for today. And so and I love that you guys are here and so interactive in the chat. If you're here for the very first time, feel free to type in a greeting so that we can welcome you to this community. But to Carol and Kings Bay and Luke and Will and Ranjit and AP514, who always helps me check my math, and the rest of the gang, thank you for bringing this class to life by being so participatory. It really brings the energy out in the group. Okay, so we are going to start with the SPX. We were down over 20% from February 19th to when it hit this bottom here in April. And we've come a long way back. And so the bulls are now smiling. The bulls seem to have gone back or the bears seem to have gone back into the woods. I don't know if they're hibernating. It's been a really interesting year in the market so far. But right now, as far as the bulls are concerned, there's a lot of sunshine happening. And we're seeing the same thing with the NASDAQ, which is our tech-heavy index, no financials. And if we come and we look at the Dow, this is different from the S&P and the NASDAQ in that these 30 stocks are based on the price of the stock as opposed to the market cap of the company, but a pretty similar chart, right? We had a big pull down, it's crossed, we have a diagonal resistance breakout. Now, unlike the NASDAQ and the SPX, this one is not up today. Yesterday, it got dragged down substantially because of UNH, which had a precipitous drop after already having had a precipitous drop on, April 17th. And it has continued to fall. So Humpty Dumpty has nothing on UNH these days. And because it's only 30 stocks, and this is an expensive stock within that group, it has a big impact. Okay, and then if we look at our small caps, and we don't tend to trade a lot of the small caps, but they're kind of a bellwether, many might argue. Again, kind of a similar looking chart here. Diagonal resistance breakout, and it's continued to move. Okay, and then our volatility or our fear index, it's back below 20. And, that's surprising some people that it's come back there. We thought it might hang out around this 2022 level for a while because, it was pretty elevated there for, quite some time, for all of April and most of May until the last 3 days. Okay, so that's that. Let's go and have a look at two trades that we placed on Monday. One was Palantir. And because we have a lot to cover and because we have a lot of new people, so welcome to all the first timers. So glad that you are here, to Connie and Arun and the rest of you that, whether you've typed in a greeting or not, Ronald, Mr. Rodriguez, Laura from Sacramento, we've got lots of new faces today. And so I hope you'll find this helpful. And this is an intermediate level class. So if this feels a bit like drinking out of a fire hose, all I can say is this. There was a comment in the survey from Monday's Trading a Smaller Account, which I treat as a companion class to this. And the comment was 2 years ago, I would have really had trouble keeping up and I would have felt kind of lost. And now I could follow along with no issues. So I've come a long way. And so all I can say is, if you're new to all of this, just keep coming back. So the idea of this trade that we did, a short put vertical, it's a spread trade where as long as the stock stays above the strike we've sold, we're happy campers. And it did. And in fact, we got out of that trade and we had our 80% gain, within a day. So that was a base hit for us. I'm going to do a trade mini management session on that and I will post it. But as you can see here, if I bring up Palantir and we just do, we're just going to do 10 days. Because, we just did this trade this week. So we opened it, and I don't know that this would have been a paper money fill. I thought we got filled at zero, but Palantir did move up pretty dramatically. And so in a live account, I doubt that we'd see this type of exit at zero. We had put in a request to get out at 4 cents. And that was filled the next day. So we were only in that trade for 1 day, which especially on a short vertical is pretty amazing. And then for Visa, we had the same. So we did a similar type of trade. Here was a stock, and let's just hone in. We had a diagonal resistance breakout, and then we had a horizontal breakout. Here was our former resistance, which was appearing to be behaving as a new floor. And again, we sold the 350 strike where the trade would be successful if it stayed above 350. And who knows where we got in? We could have got in when it was way down here. and then it came up and filled. But again, with this one, we were in it for a very short time. So, we sold this, vertical on Monday, and it got filled on Monday also. And so this is very unusual, or sorry. Yeah, we put this trade on and we ended up out of it. And that is not that common for something to happen that quickly. Okay. And it could be a bit of a paper money fill, but those two we are out of. So those are the two that we're out of. Now, in Monday's class, we talked about Meta. And with Meta, we placed the trade back here on the 7th. So that was last week. And we put in a target up here. And on Monday, this was looking like this. It was looking like a bit of a tombstone doji, or it looked like it might be about to pull back. And I said, do you want to stay or go? We took a vote and we said we would adjust the stop. Now, I actually didn't get around to adjusting the stop. So we are going to look at today's candle. And the reason that these are white, if you're new to this means, and I'm doing this whole series, just FYI, on candlestick patterns, and we added a new one just this morning. But this is white because it opened lower and closed higher. This one is still green because it's trading higher than it did yesterday, but it opened higher and it's pulling back a bit. So what we're going to do is look at the low for today. It's 654.31. And we're going to say if it goes 1% below that, we'd like to take the money and run. And why is that? Well, that's because we're up $486. Now, you may say that's not a big deal, but we're up 10% on this investment in a week. And this is an account, it has $23,000 in it. So if we made $400 and say $50, that would be 2% of this total account value. So $487 is not nothing for us. That's a big deal. And what the market giveth, the market can taketh away. And we've seen a lot of that this year. So we are going to come to our monitor tab. We're going to come to our working orders. And we are going to look at Meta, and we are going to take this target, which we wanted to get out when it went up $83. Or sorry, it's not the target we're changing, it's the exit. We're going to move it from 554. We're going to cancel and replace it. And we're going to move that up to 647.77. Now, a stop doesn't guarantee that we're going to get out at the price we're requesting, but it will trigger a market order. And what the goal here is to just try and protect some of our profit while allowing it to continue to move. Okay. All righty. Now we have in our account currently about $5,539 to invest. And so let's look at a new trade. And we're going to look at Affirm. So Affirm is in the financial space, and they do financing. Now, one of the things they finance is my annual Icon ski pass. I'm a pretty avid skier. And so I was looking at this morning, and, if we're playing I Spy with my little eye, I'm seeing a bit of an inverted head and shoulders. And then it's breaking out, and it came down here to about, $31-ish. And so it went from 31 to 53. And so, somebody might say, well, a technical analyst, and if you're new to technical analysis, you might want to join me on Tuesdays for getting started with technical analysis. but that's about a $22 move. And so a technician might say, well, then I could put in a target here of, about $75. And we could just buy 100 shares, but it's trading at 57 and our max position size is around 5,000. So that might be a bit much, but could we come here and sell a call at 60? I wonder what the premiums are like. And just do it as a, not a long-term hold, kind of a dating strategy. We'll see how it goes strategy. And so if we come to the trade tab and we look at a firm and we even just come out to June 6th, which is only 23 days away, they'd pay us, about $250. And you may be saying like $250, that's not that much. Well, yeah, but it's a $60 stock. So if we get paid $250, and the stock is 57, let's just call it 57, just to make the math easy for me, that's about a 4% return. Plus, then we get, the 280 that the stock went up, if in fact it went up through there. Okay. And this is called a buy right covered call. And so we're looking to buy covered stock. Okay. And we're paying $54.75. So what's the most we can make is the difference between, the most we can make is $60 a share. And if we're paying $54.75, so we could make $5.25 on an investment of $54.74. Well, that smells a lot like about 9% to me. Let's see what it is. Oh, 9.6% for a trade that we might be in for 23 days. Well, what if it doesn't work out? I like that question because sometimes things don't work out. We've seen a fair bit of that this year. So if we look at this recent low, like yesterday, it went down to 52.60. So if we went 3% below that, that would have us at 51.02. So if we're paying $54.74 to get in, we're risking, about $375. Now, again, there's no guarantee that, we'd get out at the price requested, but we're going to change our single order to first trigger sequence. We're going to come up here and right click and create an opposite order. And we are going to make this actually a market order because by creating an opposite order, we're buying back the call. And we don't know exactly what that price will be. But what we're saying to ourselves is, hey, self, if this goes below 51.02, buy back the call and let's exit the position. Okay. So confirm and send. So that's our buy right. And even though technically speaking, we think this stock may blow through our call, if we're called out prior to, and we can get called out at any time, if we were called out prior to June 6th, would we be crying in our beer? I don't think so, because that would just mean we've made our max gain faster than we were anticipating. And so anytime you make a max gain, this is not a cause for sorrow. And this is a weekly option, which means that it might be less liquid. But one of the things that we look at is there volume here and is the bid-ask spread tight? And, it's 10 cents on a $2 option. So we now don't have much money left. So we're going to come and look at a couple of our trades. So we had a stock with a target, one on Meta that we've already looked at. And then the other one we've got is Comcast. So when we look at Comcast, we're up by $3.50. And what we did with Comcast is we said, you know what, this may be lollygagging about, and if we come back here and we see that this has been trading in a range, it had bounced off the bottom and we thought we'd, exit when it got to the top. but it hasn't been moving very much. And so we can, when we exit our position on Meta and we have more cash in our account, because this, we've got 23,000, when we have more cash in our account, we could put this back on. But because we're a little strapped, we're going to go ahead and we're going to liquidate this position. So we do have an exit on Comcast, our target, and we're just going to cancel that whole thing, cancel the group. So now we can see, should be going, there we go. So that's gone. And then we'll come back and just create a closing order to just sell it at the current price. So we haven't made much, but there's no transaction fee for Comcast when we buy or sell a stock. So, we have enough to go through a drive-through and buy a coffee, but not a dirty chai, with a $3.50, that we made on that one. But now you'll see we have a little more money back in our account. Okay. So let's look at a couple of others. And one of the things, you know what? It's funny that Bush said it looks like a perfect candidate for an iron condor, and it did, but it's such an inexpensive stock. It was tough to get the premium. But since you brought it up, okay, I wasn't going to do this trade next, but let's go to Mickey D's. So when we look at McDonald's, here's another one that's been trading in a range, right? Like, it comes up and it's bumping its head on this 321-ish, 320-ish level. And then when it comes down to around this 295-ish, and, keep in mind, support and resistance are ranges. Yeah, Thea is saying, why is volatility so high on a firm? I don't know, but it gives us very high premiums. That was on a firm on that last trade that we placed. But with McDonald's, could we do an iron condor? And I think of an iron condor as a credit spread sandwich. So for those of you who are new and may not be as familiar with these strategies, we're selling a short put vertical here, which means we want the stock to stay above that 295-ish level. And then we're selling a short call vertical here, which means we want it to stay below that 320-ish level. And so as long as it, moseys about in here for the next 3 weeks or so, we're happy campers. And the appeal of this strategy, trying to draw my little happy face, my drawing tool isn't working. The appeal of this strategy is that if we're risking $5 here and $5 here, if the width of the strikes is $5, there's no way it could at expiration be both through these strikes and through these strikes. So you're getting paid 2 credits for one set of risk. Okay. And so that's what makes this strategy kind of delicious. But if a stock isn't going sideways, it may be a delicious strategy, but it won't work very well. Okay, so anyway, let's have a look at this. So we're going to come to the trade tab, and keep in mind, we want our top strikes, our short call vertical, to be like 320, 325. And the bottom, we want to be like 295, 290. Okay. So can we get enough if we come out here and say, okay, we wanted it to be 320, 320, and we're selling an iron condor. So 320 and 325, but the bottom strikes, the puts, we want that to be 295 and 290. I have a little drop-down menu. For some reason, you guys can't see it. So we'd get $1.25. Now, what are we risking? Well, we're risking the difference between the strikes or $5 minus the $1.25. So we're risking $3.75. We're going to be in this for 23 days. We want to get at least a 23% return or we don't want to play. And so we're saying, okay, well, this would be a 33% return. So we're okay with that. And when do we want to exit the trade? Well, if we've got 80% of our max gain, we'd like to take our risk off the table. So we're going to say, hey, when this is worth about 25 cents, and all I've done is said a 90% exit would be at 12 or 13 cents. So I'm just doubling that. So we're going to make it 25 cents. I'm going to right click, create an opposite order and say, hey, when this thing's worth about 25 cents, when it's worth 25 cents or less, buy it back. Now, it might never get down there, you know, and so the Monday before this expires, now I teach trading a smaller account on Mondays and Fridays, and we treat that as a companion class to this. We'll certainly exit before June 6th, and we're going to make that good till canceled, confirm and send, and we're going to put that in our Iron Condor bucket. Okay. Okie dokie. Now you'll see here that we have a group for Iron Condors and now McDonald's is in it. And we have a group for our buy right covered call, which, you know, we just put in, oh, wow, we've made $6. You know, so, and again, this idea was we bought 100 shares of stock, we sold a covered call, and the goal on selling that call was to be called out. Okay. Okay. Let's look at another one. So let's look at Caterpillar. So Caterpillar's had a nice run up. So it's been uptrending since it hit this bottom back on April 7th. But today it's pulling back. So we may just want to watch it to see if it's going to continue to go up. And so, you know, that one we may want to wait for confirmation. Now, we could place a conditional order, but we have other trades we want to place. You know, if we look at Chevron, this was kind of in this sideways range, and then it broke out and it's come back to retest. But we don't have confirmation yet that this 140 level is going to hold. So we may just want to wait for another day. Okay. And the reason I'm pointing this out, and you know, could you place an order today, like and do like a short put vertical or something like that? Yes, but we do have a dividend coming up, and dividends can, you know, have a negative pressure on the price in the short term. And so we have to take that into account as well. Okay, so let's come and look at Honeywell. And, you know, I get asked often, like, how do you choose, you know, the examples that you do? And so I thought I'd show you a couple of the examples that just didn't, you know, make the cut and why. And so here we have Honeywell, and it was kind of trading in a bit of a range, right? Like, you know, where it kept coming up. So it gapped down, and often this is considered a resistance level around the 215, and then it started to fall. And then it came up, and man, like this 215, it has had a time of it trying to get through that 215 level, hasn't it? Like, you know, when we look at it, this is considered, you know, a resistance level 1, and then it came up and hit its head here and here and here. And here it spent a couple of days. Here it hung out for like 3 days. And then it kind of peaked above, and it looked like it was a breakout. And this is why, like, this is a range, my friends, because it didn't actually break out. It was a fake out and came all the way down. And then it came out and flirted with it for a couple of days, and now it's above. And so could we look at this and say, well, it came down yesterday, and today it opened lower and is trading higher. And again, some might consider this a more aggressive entry, but could we maybe sell a short put vertical, which means we're selling a put which means we're agreeing to buy that stock at $215 a share. And then we're buying a put to define our risk because we can't afford to buy $21,500 worth of stock. And so we're saying that we're okay with like a base hit, making a smaller amount if we can get enough premium. Well, let's see how much premium we could get. So we're going to come to our trade tab. We're going to come out. We want to be in that 20 to 50 day range. So if we look at this, you know, and we say, well, we've got a 20-cent spread here. So the bid-ask spread is met. It trades over 1 million shares a day. So let's look at, if we're selling this, how much would we get? $1.57 on a 3, you know, so here, if we get $1, let's call it $1.60, because we're live and the prices keep fluctuating, we're risking $5 minus that $1.60. So we're risking, this is based on 340. That's a potential 47% return on our risk. And the reason we're getting such a high premium is because it's trading so close to that line right now. It's at $216.97. So, you know, we've got $2 worth of wiggle room, but our expectation is that this is coming down and is going to bounce. Like this old ceiling is going to start acting as a new floor, old resistance, new support. So we've had earnings on Honeywell. And, you know, if we go out and we look at some of the news, Citigroup adjusted their price target. So they moved the price target up, moved price target to 226, raised price target to 225. Jefferies raised the price target to 215. B of A price target 250. It's sitting at 217 right now. TD Cowen, there was one that lowered their price target. Barclays is saying overweight, but lowered the price target to 243. That's still higher than what most of the people have raised their price target to. But the overall, analyst expectation is bullish. And so that kind of can factor into it as well. So we're going to go ahead and put this trade on. And again, we're going to change our order to a first trigger sequence. And we are going to create an opposite order and say, hey, when this is worth about 32 cents, buy it back. And do we have to wait? Do we have to wait? Like maybe it's at 35 cents and then it looks like the stock, it's been going up and it looks like it's going to pull back. Do we have to wait? No, we can go in this and change this at any time. And so we're going to put this in our short put vertical bucket. Okay. By the way, if you're new and you're wondering, yes, the open interest was a little light, B. Our rule of thumb on that is that we want to have 20 times, and we're just doing one contract. This is at 16, but the bid-ask spread is tight, and we have 38 here. And so we were okay with kind of bending that rule a little bit. Now, some of you may be saying, like, rules, what rules are you talking about? And I'm glad you've asked, because if you haven't already, hit the subscribe button and subscribe to the Trader Talks channel from Schwab Coaching on YouTube. You're going to want to do that. And it's another free resource for you to take advantage of. And when you first get there, what you'll see is whatever class is currently being taught. And then if you come to playlists, and this is where James came to get the playlist for this class, but there's another playlist which is just topics Barb wishes she could talk about in class but doesn't have the time. Or I wanted you to be able to just come and binge learn. So I'm doing this series on candlestick patterns. I just added the bullish engulfing pattern, and today we'll do the bearish engulfing pattern. But so you can do some binge watching. These are all like 3 to 5 minutes long. And then if you come down here, here are some example trading plans. So we did a buy right covered call. There's an example trading plan for that here. We did a short put vertical. There's an example trading plan for that here. And if we do a long call vertical, here's another example trading plan. If you're new and you're newer to Thinkorswim, I've done a bunch of short videos just on Thinkorswim. So how to customize a chart, how to customize the monitor tab and create those groups and all, and then customize the fields within the group, all that kind of stuff. So yeah, AP 514 is saying minis are the bomb. Like it's a resource I would have liked to have when I was a client, and I started as a client. And so that's why I've created them. And this, the power of compounding, these 2 videos, if you haven't checked those out, I encourage you to not only watch them, but share them with your family or neighbors or, you know, friends, kids, all of the above. I'd appreciate it, and I think they would too. Okay, the other thing that I said I would show you is if we come to schwab.com, Schwab coaching. If you are new and you're saying like, hey, you know, people are calling James Boyd the GOAT. And the first time I saw that, I was going to hide that comment because I thought it was really rude. I didn't know that it stood for greatest of all time. But if you want to see James' classes, James teaches every day. So he's teaching this afternoon, 4 o'clock, trading growth and value stocks. And if you want to see the classes, somebody said in the survey on Monday, I wish Barb taught every day. Well, your wish has been granted. I do teach every day. So, and tomorrow we're going to talk more about that buy right covered call thing in $1 million account so we can trade more expensive stocks. So you'll want to come at 4 o'clock Eastern tomorrow and check that out. Yeah. And so this is where you can see the schedule. We have classes going all day, Monday through Friday, from the market open at 9:30 Eastern until the last class starts at 4 o'clock. And then these in-person events, these are another free resource. They're free for you to attend. I mean, they're not free for us to put on. Trust me on that. You don't even want to know the price tags. But, you know, our clients are worth it. And this one is an advanced options in Anaheim. The next 2 are market drives. And here's the deal with a market drive. It goes from, you know, here's what's happening globally in the market. Here's how impacts are impacting the market. Here's how sectors, the individual sectors, like the energy sector, consumer discretionary. Yeah, somebody's saying $1 million is too rich for my blood. And, you know, I'm glad you said that, because it doesn't matter whether you have $1 million or 100,000 or 50,000. The concepts apply to everything, and to everything we do. And a lot of people come to trading a smaller account where, you know, we started with 25,000. Every other year we've started with 20,000. And, you know, a lot of people that come to that class have $1 million accounts. And they're just, you know, trading a portion of that, or they're just trying to gain knowledge. And again, all these example trades we do are just example trades that are not recommendations, but people are following along in their paper money, and you know, it's helping. Okay, so I was teeing myself up to look at another trade that we had. So kind of back to our regular programming just before we wrap up here, because remember how I said you don't have to wait until you have, you know, 80%. So if we come down here to our short put verticals, we were up 50%. We've given a little bit of it back. We placed this trade on Monday. How do I know that? Well, if I come down here to view trades, it said we placed it on the 12th. So we placed that 2 days ago. So let's go and look at Goldman Sachs. So when we look at Goldman Sachs, we could say, well, we're just going to wait because there's no sign that it's pulling back. But if it were pulling back, we might say, hey, maybe we take the money and run. And that's how much time it can take to make that decision. Now, I am going to put a little survey in the chat. Goldman Sachs, if we come to the account statement and I type in Goldman Sachs and we come back, let's call it 50 days. We've done a lot of trades on Goldman Sachs, and we call that wash, rinse, repeat. Like if it keeps working, maybe we keep doing it. And so here's my question to you. Because somebody said in the archives or in the survey, would love to see a review of our, wash, rinse, repeat. And if you want to see that, I'll create I've just started the poll. So let me know what you think. If you're watching this in the archives, give me a vote, yes or no. And then what I will do is I'll go through these numbers and see how we've made out, since the beginning of April on our trades, and we'll tally them up. And I'll put that in the trade management mini sessions, which are in between the example trading plans and the things on Thinkorswim. They all have orange logos. So Vita is asking if there's a class to learn how to do verticals from the beginning, and there is a whole getting started with options series, and there's a class just on short put verticals. I'll put a link into one in the show notes. Okay. So what have we done today? So we did an iron condor, which is a credit spread sandwich, 2 credit spreads on McDonald's. We did a short put vertical on Honeywell. We exited our position on Comcast to free up some cash to be able to do this trade on Affirm. And so guys, I have lots of other things I would have liked to share with you, but 45 minutes goes fast, doesn't it? So here's what I ask as we wrap up. If you aren't following us on X, please follow us, James Boyd CS, Barbara Armstrong CS, so be there. Hit the like button. It's your chance to do a favor for a random stranger whom you may never meet, because it moves this up in the algorithm so more people can find this content. So hit the like button, and it also lets James and I know that you thought we did a great job. And then I don't believe there's a survey today, so you're off the hook on that. But then if you haven't subscribed, you'll want to do that as well. Take care, everyone. Have a really awesome rest of your day. There's lots of great stuff still to come, so stay tuned. Bye for now.